Hi everyone, today we're going to talk about sales returns and allowances and how to have this account show up on a separate line on your P&L. Let's quickly look at the behind the scene journal entries QuickBooks does when you invoice. When you invoice, QuickBooks debits AR, which is an asset account on your balance sheet. So this lets you know this customer owes you money, assuming it's a credit sale. And it credits sales, which is the income on your P&L. These are the natural states on a double-sided accounting system. You would debit AR to increase that account. You would credit sales to increase that account, right? And the sales account is the mapped account in your item setup. So in our example, if we looked at our item list, okay, we're going to be dealing with this part here on a return. And you can see this is mapped to this income account. So when I invoice, this is the sales account this is pointing to. When I receive a bill and I use the item tabs on a bill, this is the account, that this is mapped to. But right now we're just looking at the sales side because we're dealing with a sales return and allowance. If you have inventory when you invoice, QuickBooks also debits the cost of goods sold, which is a P&L account, and it credits inventory. It's just taking this part out of inventory. So this is what happens when you invoice. These two things happen. Let's go ahead and walk through an example. First, on your chart of accounts, you want to make sure you have a sales returns and allowances. Here's mine. And if you look at how to set this up, it's fairly easy. Set it up as an income account. This is actually a contra income, or what we call a contra sales, which means it's going to debit sales instead of credit sales. And by debiting sales, we reduce it. So, and then look at your income numbers. I put mine down here. I'm not going to be getting a return on freight. It has nothing to do with vendor returns, but wherever you're happy with here, I always recommend numbering. All right, so let's go ahead and go to an invoice. And here's a test customer, and I invoiced him for one of these parts, and he wasn't happy and he returned it. And so I issued a credit memo. Now let's take a look at the P&L to see what this thing looks like. And here you see, we have nothing. What happened was it just zeroed it out. What QuickBooks does when you have a return, it debits sales and it credits AR. So all it does is reverse the initial entry here. That's all it does. It reverses it and just wipes it out so you have a net of zero. So you never see that sales return. And your sales number's understated because actually that really was a sale, assuming it was earned if you're under accrual accounting, and you really did have a return. So how do we handle this so we can see it stated correctly on our P&L? And what we're going to do is we're going to go to Company. We're going to make a general journal entry, and I already have one here ready to go. So on the top line, you're going to find that sales return and allowance account, which is right there on my chart of accounts. Then you're going to find that sales stream that it initially went to. And my example was pool cover and equipment sales. I'm going to debit the sales returns and allowances. I'm going to credit sales. I note the invoice number, and it's to record a sales return. I put the name of the customer there, hit save and close. Yes. And you can see on our P&L, we have our sales, we have our sales returns and allowance. So at the end of the year, when you do your Schedule C, you'll have the correct numbers. And more importantly, all year long, you can monitor this account to see if there's a problem.